They ran your credit and you're paying cash? It's another one of those do not sign documents. Don't get caught by this trap by signing this dealer document. Hey everyone, Kevin Hunter here, the homework guy. For the last 16 years, I've been helping car buyers dodge the dealer gauntlet of deceptive practices, including how and when they pull your credit. Let me ask you something. Are you planning to pay cash for your next car? Or maybe using your own financing through a bank or credit union you got yourself? If this applies to you, there are things you need to know. Let's get the amazing Elizabeth in here and let's get this party started.
All right. If your answers to Kevin's questions were yes, so you're either planning to pay cash or you have your own financing lined up, good for you, by the way. There's one shady little document dealers will still try to get you to sign, and if you're not paying close attention, they'll use your signature to run your credit. To so many lenders, it's called shotgunning, and that can do serious harm to your credit. Incidentally, they also sell your information, and as mentioned, and this tactic could possibly even tank your credit score, making it impossible for you to buy a car elsewhere. And that's exactly why they do this.
Most definitely.
The form I'm talking about is called the Credit Application Authorization. And today we're breaking down exactly why you should never sign it unless you absolutely are going to use the dealer's financing.
Before we get into the Credit Application Authorization, let's expose what shotgunning is.
Right.
What does shotgunning credit mean? When a dealer shotguns a credit application, they submit your credit app to multiple lenders simultaneously or in rapid succession. Boom. 1, 2, 3, 4, 5, 6, even 10 lenders. Oftentimes they do this without clearly telling you how many lenders will see your credit info or pull a report. The goal for the dealer, it's to find a lender who will approve the buyer and give them the best deal for the dealer, not necessarily the best deal for you, the customer. Dealers sometimes earn incentives or rate markups from lenders depending upon which lender approves the deal, so they are on the hunt for an extra payday for themselves.
So here's why this is a problem for consumers. Multiple credit inquiries appear on your report in a short period, and that's not good. While FICO treats auto loan inquiries made within a short window, usually 14 to 45 days, as a single rate shopping event for scoring purposes, it can still look messy to lenders and remains visible on your credit report for up to 2 years. Think about it, because 2 years is quite a long time for that damaging effect to haunt you. Shotgunning can mean your personal info is shared far more widely than expected. This kind of an event can lead to identity theft or other financial challenges.
And nobody needs their identity stolen.
Right.
The big question, does this practice violate a federal law? On its own, shotgunning itself is not illegal under federal law, but it is regulated. Some relevant laws, the Fair Credit Reporting Act, FCRA. A lender or dealer must have a permissible purpose, your authorization, before pulling your credit report. When you sign a credit app at a dealership, you are generally authorizing them to submit it to multiple lenders. You can stop this by asking to see a list of potential lenders and then you limiting the banks they send your application to.
But, and here's a big but, if a dealer submits your credit app to lenders you didn't reasonably consent to, it can arguably raise an FCRA issue around informed consent. Some lawsuits have targeted this practice when dealers did it without clearly disclosing the scope of the credit authorization. Number 2, one of our favorites, the Truth in Lending Act, TILA. The TILA governs loan disclosures, not the credit pulling process itself.
And then, of course, there's the Gramm-Leach-Bliley Act, GLBA. It regulates how financial institutions, including dealers, when they act as creditors, share your private information. Dealers are supposed to provide a privacy notice and handle your data responsibly, but quite often they don't. The bottom line, shotgunning your credit itself does not inherently violate federal law if you signed a credit application that authorized the dealer to seek financing, but it can create consumer harm when done without clear disclosure or when an excessive number of banks are contacted.
So here's the best practice for you consumers. When buying a car, say very clearly, I authorize you to submit my credit to one lender only, or tell me exactly how many and who they are before you submit it. I want to individually authorize each credit pull. Things like this. You can limit their scope and protect yourself from unnecessary inquiries.
Now back to the credit application authorization. What is it? This document gives the dealership permission to run a credit check on you, even if you've said you're paying cash.
Right.
They usually disguise it as part of the standard paperwork, but it's not. You might see vague titles like credit authorization or finance application.
Yep.
Or it might just be a signature box they hide in a larger document. This is not legally required for you to buy a car at a dealership. Under the Fair Credit Reporting Act, FCRA, a business must have a permissible purpose and your explicit written consent to run your credit. If you are not applying for credit through the dealership, they have no legal reason to pull your credit report. This means no soft credit pulls, no hard credit pulls, no bundled multi-lender credit submissions which can tank your score.
And what happens the moment that you sign the authorization? They pull your credit report, possibly from multiple lenders, like we mentioned. They package and sell your personal data. They hurt your credit score with multiple hard inquiries, all while you're sitting there with a check in your hand.
Why dealers want you to sign this, even if you're paying cash? Dealers profit in multiple ways when you authorize a credit pull. They sell your data to lenders, insurance companies, and third-party marketers. They may claim you weren't approved and then manipulate you into an even worse financing deal. Some dealers fake loan quotes to earn kickbacks from banks. And worst of all, they might stack multiple credit pulls without telling you. This is completely unnecessary if you're not financing through them.
So why you should refuse to sign? Let me make this very clear. If you're paying cash, the dealership has absolutely zero legitimate reason to access your credit file. Signing that authorization gives them power that they don't deserve and opens you up to an identity theft risk, unwanted loan offers, unexplained drops in your credit score, and let's not forget to mention all those really annoying phone calls and texts that come out of nowhere.
That's right. And your mailbox fills up with all kinds of loan
junk
declines. Yeah. All right, number 4, Homework Guy pro tip, how to handle it. Here's what to do the moment they hand you a credit form. Cross out any language that mentions credit pulls, either soft or hard. Write, paying cash, no authorization given, clearly on the form. Refuse to sign any document that gives blanket permission to run your credit.
That's right, and if they insist it's just standard procedure, tell them, then this deal isn't happening. You don't owe them access to your financial life just because you're buying a car from their establishment.
That's right. Make sure you know your rights. Did you know under federal law, a business must have written consent before running your credit? If they do it without your permission, that could be a violation of the Fair Credit Reporting Act, and you could have grounds for legal action. Keep a copy of everything you sign, and if something feels off, walk away.
And if you walk away, keep those papers with you. Here are some final thoughts. Don't sign away your privacy. Here's your Homework Guy checklist. Don't sign a credit application unless you are actually applying for dealer financing. Always write paying cash, no credit pull on your forms. Walk away if they insist it's mandatory. And of course, if you'd rather not deal with these games at all, you can always hire one of our car coaches to handle the deal from start to finish the right way. Visit us at thehomeworkguy.com and look for the big red button, or text me today at 701-441-3399 and I'll help you get connected.
Have you ever had your credit pulled without permission at a dealership? Let us know in the comment section down below. Your story could help someone else avoid this trap. If you found today's video helpful, give it a great big thumbs up, share it with your family and friends, and subscribe for more episodes like this. We're here to make sure you stay in control of the deal, not the other way around.
That's right. Don't fall for these scare tactics you run into out there. And remember, the Homework Guy team has your back 100%. If our video helped you out today, make sure you hit the like button, subscribe, and ring the bell for more no-nonsense car buying advice. Remember, the Homework Guy team is here to help you. If you want us in your corner to run your whole car deal, check out our hassle-free car buying service. Remember, buying a car is one of the biggest financial decisions you'll ever make. Don't ever let anyone push you or rush you.
To all of you long-term viewers and subscribers out there, you guys rock. God bless you all. I'm Kevin Hunter, the Homework Guy, signing off behalf of Alex Stevens, our auto expert, the amazing Elizabeth, our master negotiator, and the entire hassle-free Homework Guy car buying team. Stick with us a moment as we scroll through some of our recent 5-star Google reviews. Thanks for watching.